This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. I think some of this pressure linked to the ongoing tensions in Ukraine. Longer term, though, we think that the main trend is still higher. We feel that it is very likely that we will see some new historical highs in S&P 500 futures within the next couple of weeks as the Fed's accommodation remains in place, even though the consensus view is that the Fed will cut back on their quantitative easing program at the upcoming FOMC meeting. They'll probably cut back by $10 billion. Currently, they are at $65 billion per month. So in any event, we are seeing a tendency for stock index futures to ignore bearish news when we do get it and overperform on the upside on bullish news. Over in the currencies, we are seeing attempts by a couple of central banks to talk down their currencies. We had comments from a European central bank policy maker basically trying to put pressure on the euro currency, even though we did have better than expected economic numbers from the Eurozone, that only having minimal impact. So it does look like the euro currency will probably work higher against the US dollar in spite of these attempts to talk that currency down. Something similar happening with the pound. We had the Bank of England governor trying to allay some of the talk that there could be a near-term rate increase from the Bank of England. So the pound a little bit lower on those comments, even though we did have better than expected economic numbers today coming out of the UK. So the pound will probably do well also against the US dollar. A little pressure in the Japanese yen. This ahead of the planned increase in sales tax in Japan that will go into effect this April. So there could be a slowdown in Japan's economic growth in the second quarter because of this sales tax increase. Longer term, still feeling that the dollar index will come under pressure, even though there has been in recent days some flight to quality buying in light of the situation in Ukraine supporting the dollar. So longer term, the dollar index is, I think, going to be pressured. It was not that long ago that we did see 10-week lows in the dollar, and I think these lows will be surpassed to the downside in the next couple of weeks. Credit markets, some flight to quality support coming in light of the situation in Ukraine. Supply an issue this week being a negative. Longer term, though, if we are right in our thinking that growth in the U.S. economy is slowing, that will be supportive, and we remain bullish longer term for treasuries. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.